Okay.
Is it live?
Yeah.
I'd say you might as well just start.
Okay.
Because there will be a delay.
Okay, Assalamu alaikum. My name is Oussama Metatla, and on behalf of anasr.org وInspire magazine نرحب بكم من هذا اللايف برودكاست. اليوم أنا معنا Professor Meziane Lasfer رانا في CAS Business School, City University, London. Professor Lasfer is a professor of finance, and he specializes in applied corporate finance. مرحبا بك أستاذ.
شكرا.
يعطيك الصحة for receiving us here with you today and for speaking with us and taking the time to address Inspire Magazine and anasr.org viewers.
My pleasure.
So just to set the scope of this interview, what we want to do essentially is to get to know you a little bit and get to know what you do in research and how this, your work, your research actually may be applied or is related to Algeria.
Mm-hmm.
And we're trying to make this accessible to both non-specialists and specialists, inshallah.
Excellent.
So, time permitting, يعني إذا عندنا الوقت إن شاء الله راح تكون فرصة للمشاهدين, to viewers, to ask questions. Donc, إذا تروحوا anasr.org/live, can instructions on how to ask questions later on in the interview. You can write comments on the page. إن شاء الله إذا كان الوقت نقدر نقراهم ونطرحهم على الأستاذ مباشرة. So, Professor Lasfer, so can we start this interview just to ask you about your background? Tell us about your professional and academic journey that has led you to where you are.
That goes really very far. It makes me feel old. Well, basically, I started here in 1990, so I've been working at CAS Business School, City University, London, since for the last 24 years. So that makes it really one. I am one of the oldest one in the university, so they respect me. So each time they see me, Sheikh. Yeah. No, before, I mean, everything went well, and really I'm very happy with my choice, etc. So before that, I was I got PhD in Bath University in 1987. Then I went back home to do the army. Unfortunately, it took 3 years. So and then I really wanted to develop my research, because Algeria, unfortunately, was not the right place to develop the research. I didn't have the facilities, and there are not many companies that are appropriate to analyze. And for me, the stock market is very important. So whatever I look at, we tend to do the research mainly on quoted companies. And given that there are not many quoted companies in Algeria, so it was very difficult really to stay there. Right. Well, before that, I mean, if we start from the beginning, I was born in Benyani, a small village in Benyani called Tigzirt, and that was in 1958. And then since then, I mean, I went to school there. It's just mountains, and so actually in the background of my computer, I still have the mountain. Yes, exactly, the mountain, as right. I could see it every morning when I get up, and then see that mountain. So it makes me really happy. Still the connection is there, obviously. So then I came to Tizuzu. I did. I was in boarding school to do the secondary school, secondary education, until I got the bac, and then I went to Algiers. I did the École Supérieure de Commerce until 1980, and then 1980 I got a scholarship. At that time it was very competitive, but they selected me, so they gave me a scholarship, and then I came here. I did 1 year English. Because obviously in Algeria we didn't really study too much English. It was okay, but really it's a different environment. So the fact of coming here, living with an English family, I learned quite a lot. I learned the culture, I learned obviously the language, and obviously I carried on doing also my education, because I was very interested I'm still interested in business. So I was going to the library and reading books, etc. Right. But it was funny, because when I came here, I was really reading books of children to learn English. So now when I read them to my kids, I say, oh yes, this is I read this in 1980, in December 1980. Yeah, it's still in my mind, because that is really the way you learn English. And then bit by bit, obviously, you go into more bigger books and more advanced books. And then since then, so I was in Cambridge for 1 year doing English, and then I came to London School of Economics. I did 1 year diploma, then I went to University of Bath. I did an MBA and then did PhD. Yes, it was very hectic because obviously the work is extensive, and coming from Algeria to study here, you've got many problems. The first one is obviously the language, the culture, but also the way we write even maths. I mean, the mathematical equations seem to be different, the way you write it in French and also in Algeria.
So it took a long time to kind of adapt and then...
Oh yes, from scratch. So really I was finding it very, very difficult to understand. I remember when I was at the LSE, I was riding, I always ride a bike, but I record my lectures in the lecture room so that I listen to them while cycling because obviously with cycling it's much cheaper, so you don't pay the cost of the health. Yeah, even now I want to cycle, but I still do a little bit. But so therefore it's really kind of because in fact really to tell you the truth, I still have some tapes of one lecturer at LSE when we did industrial economics, and he was a fantastic lecturer. But you go like that to the he stands up like that in the lecture room, and then you find all next to him tape recorders. Yes, that time they were Walkmans. So we had really recording on tapes, and some of them I still have them at home. And but it's like that we learn, because it's really coming here. It's not very easy. It's very, very difficult. I mean, but you need to be dedicated. And alhamdulillah, the things work out. So really, this is roughly what I have done.
A really long journey.
This is a kind of long journey there. Yeah.
So if we start to get a little bit into your field, so your specialism is in applied corporate finance. But before we do that, maybe we can try to make some basic concepts in your area accessible to people like me and viewers who are not familiar with this area. So can you tell us, like, just to start with, what are financial markets, and what place do they have in an economy?
Okay, that's a really critical question. First of all, if we talk about finance nowadays, finance is really not just one discipline. It's really kind of divided into different disciplines because of the development in the area. The development more kind of from the practitioner perspective as well as from the academic perspective. So therefore, financial markets is one component of the whole kind of different units or different modules of finance. So if we teach now finance, we cannot teach finance as such. So we have here about 20 masters in finance, but they are all different finance. So we have specialisms. So for example, we have international accounting and finance, we have MSc in corporate finance, we have MSc in mathematical trading and finance, so there insurance, etc. So there are all different disciplines. So coming back to your question, a financial market is really kind of something that is fundamental, is the core of the finance of a particular country. So you will find in it banks, which are really common. You find them in Algeria, you find them in here. There are so many banks here in Germany, in Italy, so they are everywhere. But more importantly is that it's not a bank that is important. There are the other kind of structures that are very critical. So for example, if a stock market is very, very critical for the development of the financial market, the bond market, the derivatives market, the insurance market, the advisory market, so for example the investment banks. So when we look at bank, it's not only where you're going to put money and then get it when you need it. No, this is a very, very basic function of commercial bank. Banks have developed so much to really to cater for various needs of individuals and as well as companies. So your financial market is really, put it this way, is where you have got savers. Like for you get, for example, a salary, then you put it in a bank. That money is not going to stay in that bank. It's going to be used in institutions that need it.
Right.
So you've got the banks that have excess cash because we are putting all our money there, our salary goes there, etc.
Right.
And but you have here the users, and the main users are companies and the governments. So the governments can really kind of get this funding from the banks and then use it obviously to pay the employees, to pay for particular projects, etc. So if a financial market is only defined in terms of a bank, it's not financial market really. It is a bank is only one component of financial market. So a financial market is the structure that includes many kind of disciplines and many specialized companies that allow this transfer of funding, the flow of funds, from the savers, like you and I, individuals, the people who've got excess money, or companies that have got excess money. That money is going to be channeled to the people who need it, or the companies that need it, or the organizations that need it. So if we have a complete financial market, when there is this loop, you start from a depositor, it goes to the user, and then the user returns this cash to the bank or to the financial institution, and then that financial institution will give back the return or part of the funding to this user, to this saver.
Right. So what would characterize then with this idea of this circularity? What characterizes a mature financial market versus a less mature or risky financial market?
That's again another good point, in the sense that a mature or complete financial market is really where this process is done chronologically. So it's in other words, you go from one stage to another without any barriers, without anybody stopping you to tell you, for example, oh, don't lend money to this person, or don't lend money to this company. Or another bad financial center is, for example, if you have the users here that are trying to get funding and there is no funding. So that's really kind of so on the one hand, maybe where you have the savers that cannot put their money in securities, buy some securities that are going to allow that saver to get good return. The other component is when you don't have, you have the users that cannot find funding. So, for example, now in the West, really the companies are struggling to find funding. So the government is trying to help them, but really the financial system, the financial center in the UK, for example, is facing a very difficult situation since 2008 financial crisis, because banks, they don't have enough money to give to those users. So this is really kind of an incomplete financial center sector, because you've got the disproportion between the money that is available for investments and the demand for that investment.
Or so anything that blocks this flow from either direction.
You need more pumping money. So you need some people who are going to bring more money to put in those banks. Then those banks will be able to lend the money to the others. So for your second question, in emerging markets, again, we find some dislocations between those structures, this flow of money, the way the flow of money is going. For example, where there is no trust, where people, they don't want to leave to put their money in banks. Why? Because they are worried that that their money will get lost, or there is a kind of fraud or something like that. Again, that is a big problem that you might find in some countries, say some emerging market countries, where there are no laws to protect the investors and obviously also to protect the users. So when you have a set of rules, laws that protect, that gives this trust some weight, then you have a much more complete market, much more developed market.
So the more that these laws are developed and adhered to, the more mature the financial market of the flow is.
That's true. I mean, there are also other factors. We have one company here, not very far, that ranks the financial centers, and they identified a number of factors that contribute to a development of financial center. I mean, I like it, and I present it in some of my courses when we teach executives, and because the first one of them is education. It's very critical to have people who are educated, who know how those financial markets function, and who can contribute to an efficient financial market. We say efficient in the sense that it's really that that there is no cheating, that there is nothing going outside. Everything is fairly priced. I mean, I go and buy some shares in the stock market. I know that this price is efficient in the sense that it's not overvalued and it's not undervalued. So therefore, I'm paying the correct value for those shares, and therefore it's a good investment that I'm making. But in some markets where you don't have this kind of efficiency, partly because maybe there are not many educated people there. They don't know how to function those markets, etc. Then you will be cheated. You buy maybe one company or one stock in one company that might cost you something like £100, but then effectively it's worth only £2 or £1. So you lose lots of money.
So this brings me nicely into the next question, because you do a lot of research on what we call initial public offerings,
that's
IPOs. But before we go into this, now clearly there's a difference between a private company and a public company.
Yeah.
So can you tell us what the difference is? What's a private company? What's a public company? What does it mean to move from being private to being public, and what kind of impact does this have on the economy?
That is a very, very important issue in the sense that, when companies kind of are created, they're usually private. I mean, usually in my class, I give the example of anasr.org. So Jeff Bezos started his company just by bringing in, I think, $10,000. And he borrowed about $40,000 from the bank. And then since then his parents gave him some money, then he went into venture capitalists, and then he had an IPO, which we'll discuss in a minute. And now, do you know how much is the value of this company? About $200 billion. Starting a company in 1995 with $10,000, now it is worth this amount. So I tell my students when I have this exam, when I give them this example, how much did you pay for your MBA? They say 40,000. Isn't it better to be like Amazon, like Jeff Bezos? He brought. So there is a big gap between private company and publicly quoted company. But well, not unfortunately, but you have to go through this process. You have to create your company by being private, financing it by your own means, by your savings, borrowing some money from a bank, and then getting some money from your friends, from your family. Then what another part of the financial system that we described earlier is this existence of what we call angel financing and venture capitalist financing. So angels are wealthy individuals. They have got some money because they were successful in their business, etc. And then they come and give you some money in exchange for some shares in your company. So they tell you, okay, we give you something like £40,000. You give us 10% of your company. So that now in about 5 years time or 10 years time, we'll bring your company to the stock market as IPO. And then we get our returns. So we sell your company, for example, for £1 million. I will get 10% of that 1 million. So I will get £100,000 from that investment. So now I give you, say, £10,000, and then in 5 years' time I will get £100,000. So it's a good investment. But you take the risk, obviously. Maybe that company will go bankrupt. Maybe that company is not going to be successful. But that is really the business. The finance is all taking a risk, but you get a return for that risk. Now, when you grow a little bit bigger, you need more funding. So those angels, what we call the angels, are the wealthy individuals, they may give you only up to £150,000. That is the average in the UK. But now you need probably 1 million. Where are you going to get it? The best way is to go to what we refer to as the venture capitalists. The venture capitalists are companies that are specialized in getting money from pension funds, for example, or people who save lots of money. They put them in this financial company, and this financial company gives takes some shares in those ventures. So that's why we call them venture capitalists. Again, the difference between angel and venture capitalists is just because the venture capitalists give you much more money. If I give you the example of Jeff Bezos, Amazon.com, from angels, he got about £40,000. And then there were about 10 of them that gave him some money, so about £400,000. But from VC, he got 8 million. There were two venture capitalists, and they gave him £8 million, $8 million.
Right.
But then the issue with VCs is that 1 year later, or say 5 years later, they bring you to the stock market. So you have to be quoted in the stock market. So you are no longer. Usually because that is when they realize their return.
Right.
So I invest in your company, say, $4 million, but then I need a return from that $4 million. I'm not going to give you $4 million and then I stay with you forever.
So the leap to go into becoming a public company is when the venture capitalists get back their return.
In most cases, is when the venture capitalists, when you get money from venture capitalists, you know that their best exit will be through the IPO. So they put this condition in the sense that they will tell you, okay, we give you money, but on condition that you won't be any longer private company in the next 5 years. We need to bring you to the stock market. And that is really to bring me to this issue of the IPO. IPO is really the time when you stop being private, you become public. So before, when you were private, all the shares, or at least large proportion of shares, belong to you. You are the owner of that company. That company belongs to you. You sell some shares to those angels or to those venture capitalists, but maybe just small proportion. Maybe you sell 20%, 30%, but it's still private company. Even those angels, they cannot sell their shares in the market because there is no market there. You are still private. But then when you come as an IPO, you become public. So you sell more of your shares to the general public. So you will have many investors, many shareholders. And therefore, if you have many shareholders, you become more accountable to them. So now, when you are private, you work on your own. If you want to get up at 6 o'clock in the morning and work hard, then all the profit that you generate will be to you. But when you become public, you'll share that profit with other people, with millions. I mean, I looked one day at the British Telecom accounts, and you find 3 million shareholders. So even if to bring them to the Wembley Stadium is not enough.
So the shareholder can be anybody?
Anybody.
Anyone can be?
Yes, so those shareholders can be institutions. Those are really kind of the ones that have got lots of money to invest, because they bring millions and then they buy shares. It's not you and I maybe who can buy I don't know, up to say £500 or £1,000, but those institutions, they buy millions. So this is one type of investors. Those are the institutions, like insurance companies, like pension funds, like the fund managers, like banks. They invest that excess money that we talked about earlier. They could go to the stock market and buy some shares, and then they get a return on that share. So, but while for you, they give you an interest, say, of about 1%, but for them, they get a return on your money that you deposited. Maybe they get 10% return. So that constitutes their profit. So the 9% will constitute their profit. But again, you and I could also buy some shares. You go to a broker, there are plenty here. You can do it even on the internet. So immediately I have it on my phone. I just click like that, then you can buy, sell shares very easy. And that again is another component of your earlier question about an efficient market, is where those individuals it's easy for them to buy or sell, to do those transactions. In second, just on the phone, just put your number, etc. I just click, I want to buy this, and I want to put the amount, and then immediately the money, the transaction is done. So I don't need to go through the bureaucracy of sign this paper or do this. No, very quickly, immediately, everything is done.
So, I think we got a bit of background, and maybe now we can delve into a little bit more details about the kind of research that you do. I know you've alluded to some of that already, but can you give us an overview about what kind of research you do? What are the pertinent questions that you're trying to address? And maybe tell us a little bit about what kind of methodologies do you follow, do you apply to try to answer these questions?
In terms of questions, in finance there are always questions. There are so many what we call puzzles. Because we don't understand why it is done like that. So, for example, if we take your question that you mentioned earlier about should a company be private or public? So why should company be public? Well, it's you know, there is one study which is funny. They compared companies in the U.S. with companies in Italy, looking in particular at the age of those companies. What is their age when they come as an IPO?
Yeah.
In the US, the average age is about 6 years. So you create your company 6 years later, you are much more likely to bring it to the stock market because you need funding, you need. So in other words, you are willing to sell your company to be public. Anyone can own the shares.
Yeah.
But in Italy, they're about 42 years of age.
Okay.
So it's really about the second or the third generation that will bring the company to the stock market. Why is that in Italy they've got this culture that the company is like their baby. They created that company, so they really look after it. They don't want to let it go. It's like you really just want to hold your child. But the second generation, obviously, when the founder dies, and then the second or the third generation, they lose a little bit momentum. They lose a little bit this sentiment, attachment to the company, and then they bring it to the stock market. So that is one puzzle for us. Is why. What pushes companies to come to the market? Why is this difference? Why is in the US it's much quicker, while in Italy it's much later? So the other question is when you again, for example, another example of companies coming to the market, you bring your company, for example, at 100. Something like 100 million, your company, you price it at 100 million. So
that's how much the company costs.
Yes, no, it's valued. You know, so for example, we have this business school. If we want to bring it as an IPO, we can say, okay, we value this business school at say 100 million. Okay. But actually, when you sell it in the market, the shares, because you split them into shares of say £1 each, so you have 100 million shares, they will start trading immediately at say £1.20. So your company is really worth 120 million. So you sold it for 100 million, but it starts trading and it starts having a value in the stock market, which is just down here. That's why I'm putting my fingers at them for 100 million, so 120 million. So you lost 20 million. So why is this? Well, it is a loss to the company, but then we try we call it puzzle. So far, we don't understand it, so there is much research going on to try to understand this issue.
So what's the methodology then? How do you try to solve these puzzles? What kind of
well, the methodology that we use is always the research that we do is much more linked to the stock market. So we look at companies when they make decisions. For example, they make a decision to come to the stock market. They make a decision to take over another company. They make a decision to replace the management, or to bring somebody in the board of directors, or to invest. To go and, for example, buy, I don't know, start an oil field, for example, in Algeria. For example, we look at BP. Maybe they start digging in Algeria, and then they found some oil in Algeria. It's not the fact of finding oil that is important for us. What is important is how the market is valuing that news that you find oil in Algeria. Is it good or bad? And if it is good news, which we would expect it to be good news, how big is it? And that how big is it will be reflected in how the stock price is going to change in the stock market. So, for example, you as an investor, you are willing to pay for British Petroleum, for example, £5 per share. But then the company announces that it found this oil field in Algeria. Are you willing to pay for it £5.20 or £6? Because that difference of £1 will reflect what you will get as a return from this new oil field in Algeria. Or is the price just going to stay the same at £5 without any news? So if there is no change in the stock price, we say that this is not a very good decision. In other words, the market is indifferent. If the price increases, it means that it is good news, but if the worst is the price decreases, it means that it is bad news. So why is it reacting like this negatively? Is it because it's too risky? Is it maybe because they don't want, the investors don't want the British Petroleum to invest in Algeria? So those are the types of methodology that we use. So we look at the announcement that companies make, and we try to see how this announcement is valued in the market. We look also at the try to understand how companies make decisions. For example, something that might be very important for Algerian market, Algerian companies, is their choice of financing with debt or equity. Is it better to borrow to finance a particular project, or is it better to put it from your pocket, or what we call, if the company is quoted in the market, to ask the shareholders to pay for that particular investment? So if you borrow,
debt versus equity.
Very good. Yes. So we call it the leverage, or the capital structure, or debt equity ratio, or something like that. So is it good for you to pay for that particular investment with debt, or is it better to pay for equity? Obviously, when you pay with debt, you have so many advantages. I mean, the big advantage is really tax. Because when you pay interest, you deduct it from tax, so you save in tax. It's legal. It's not illegal. I mean, it's totally legal. Companies do it everywhere. The interest is always tax deductible, so therefore it provides you with benefit. But when you pay with equity, you don't have this. You don't have this tax benefit. But at the same time, if you pay with debt, you put yourself into big risk, because if you become with lots of debt, the bank or the debt holders, I mean, the bank can declare you bankrupt if you cannot pay them the interest. If you don't generate enough profit and you pay them interest, then you will be really in trouble. So therefore, it's balancing this risk with this benefit of tax, and how to measure it, and then testing companies to see really what companies do, because my research is more empirical finance, empirical corporate finance. So therefore, I use lots of data to see really how companies make those decisions. I don't develop model. I don't tell companies what they do. I learn. Very good. Yeah. So I learn. So by observing them, I learn how do they do it, and then try to find the theory behind it, or try to find some arguments.
Of why behavior that you observe.
And sometimes you discover some puzzles. Therefore, it will be in the news. It will be obviously. Our objective is really to publish papers. We don't do only research for ourselves. Is to publish them in good journals, and the rejection rate is something like about 95%, 99%. It's very, very difficult. I mean, you spend about 6 years, but then in the end, you don't get your paper published.
But I guess that's kind of very similar to other fields as well.
Very similar.
So one of the puzzles that you uncovered, and which caught the media's attention, is the idea of what happened to Facebook's IPO.
That's a good idea.
Can you tell us a little bit about what that?
Well, it was kind of a funny company in the sense that, not funny company in the sense that this company is very specific because it doesn't have any competitor. It doesn't have anything similar. It's something that is new, a company that was not making profit, a company that was just driven by the users. So anyone knows Facebook. I mean, not anyone, but at least many people know Facebook, but they don't know what the Facebook does, and they don't know where the profit, where Facebook is going to generate profit. So it came to the market at a relatively very high price. So it began at $38 per share. But in fact, the first day already the stock price was coming down, and that company was not performing very well in the stock market. So that is another puzzle. Is that unlike other companies that come what we call in the price, they come at lower price than what the price that they start trading in the market. Facebook was the other way around. So immediately the price came down, and it carried on down up to 1 year later. That the price recovered, and therefore shareholders are better off now, but they have lost for 1 year. So what is driving this? Why is this, etc.? So we had a number of I had in that video on YouTube, I had a number of explanations why it happened, and how it is difficult to bring a company to the market, how it is risky. It's not too difficult as such, because the process is very similar. Again, coming back to your pertinent first question that you asked earlier about financial markets, a financial market is a market where there are what we call investment banks, where there are underwriters that will help you bring your company to the stock market. So, because if we don't have those investment banks, not many companies will come to the stock market. So there it could be that those investment banks may not be kind of may have priced this company too high, and therefore the market really felt that it
so
wasn't too good.
This picked up. I mean, the media picked up quite a bit on your explanations, and I'll leave the viewers to go and discover this because it's kind of well covered. If you look for Meziane Lasfer on YouTube, for example, you talked about this stuff. But I want to pick up on a different puzzle that you tried to address. So you recently published this as a co-author on a paper called Optimism in Foreign Investors. So you looked at you compared the behavior of foreign and domestic investors in financial markets, and you looked specifically at mature financial markets, if I'm correct. Do you have any insights about these kind of differences in less mature or more risky financial markets? What's the difference between domestic versus foreign investors in, say, for example, the Middle East or North Africa?
Yeah, well, that study we did it in China because that is in China where it was a very good market because it distinguishes between shares in companies that are owned by foreign investors and shares that are owned by domestic investors. So we call them A and B shares. So if you want to invest in China, you can go and buy some shares, and they are willing to accept you as long as you bring money, because money is very important. I mean, to any country, when there is investment in another market, it's very, very good news. It means that you are confident about that market, etc. But the government of China decided, divided the shares of companies into two groups. One type of shares called the A shares that can be owned only by domestic investors, and the other called B shares that are owned by foreign investors. So in that paper, what we're trying to do is that we're trying to assess this issue of whether the market is really efficient or whether it is driven by what we call behavioral finance, because a worse market is where the shares are traded but driven more by behavioral issues, by behavioral finance rather than fundamentals. Because it's just for example, an example will be, I tell you, oh, I just bought some shares in British Petroleum. You hear me, and then you go and buy it. So just because I told you, you go and mimic me. So you do what we call the herding behavior. A herding is like sheep; they just go together. So wherever the first one goes, it just follows the. So that is the hypothesis that we are trying there. Is there any herding behavior in the Chinese market? And more importantly, is this a herding behavior much more? Does it exist more in those domestic investors or foreign investors? Because this herding could be driven by lack of information. If you are really expert in, say, British Petroleum, and you think that really British Petroleum is not good, I tell you that I bought some shares in British Petroleum, you are not going to follow me, because you know already that British Petroleum is not a good company. I'm not going to invest in it, because therefore you are informed. But when you are not informed, you don't know anything about those companies. For example, in China, you hear me say that I bought some shares there, or you hear me write something in the paper, then you go blindly and buy those shares because you say, oh yes, because he knows that this company is doing well, and therefore it's going to do well in the future. And that is really what we try to test, and we find that foreign investors appear to be much more optimistic about the Chinese market. So they just buy shares even when there is a big drop in the share price of companies in or the economy in China. Foreign investors, they just invest because they are too optimistic about the Chinese market. So, in contrast, domestic investors, they seem to be much more risk averse.
So, any insights you have with this kind of behavior in, say, areas like North Africa, for example?
Well, normally, if we bring this to the developed market, like for example, US or UK market or any developed market, really, this issue is relatively small. And again, we did another study looking, the herding or the behavior. So in other words, we can say that the markets are relatively efficient. I mean, they're not 100% efficient, but they may be about 80% efficient and 20% driven by this behavior, by herding, by the other behavioral, psychological factors. But in emerging markets, that is really where you have probably the reverse. So maybe 20% efficient and maybe 80% more inefficient, driven by behavioral. Now, for your question about North Africa, unfortunately, we don't have too much data. I mean, the Moroccan market is kind of a bit developed, but it's not enough to do such analysis in depth, because you need really many, lots of time series data and lots of many companies in order to understand this issue. You cannot do it only on one company or the Algerian market, unfortunately, is not really too developed. I mean, it's only.
Hold that thought. I mean, we'll come back to Algeria in a bit. I just want to take a look at a different thing. This idea of privatization of state-owned public companies. So some experts believe that privatization could be a way to improve the economy. What do you think?
It's a very big question, in the sense it is kind of put it this way. I mean, economists, they never agree, and the finance is the same. There are some people who believe that state ownership is not efficient, in the sense that a government cannot is only for politics. It should not interfere at all in the economics. So all the economy should be taken by the private sector. So so therefore, a government should not own any company. So the transport should be privatized. I don't know. Recently, I can talk about Royal Mail, the post office in the UK privatized, water company privatized, the electricity company. I mean, I pay my electricity bill to EDF, which is a French company. Well, I live in England. The water company, again, I pay 2 times water, but it is owned by private firm, by private equity firm. So really, the government in the UK doesn't own at all kind of companies. They try to divest everything. They try to put everything private. There are a number of reasons for that. The first one is by selling those companies, they get cash. They need cash. I mean, the government has got lots of debt, and it needs to pay debt, and it needs to pay employees, it needs to pay services, etc. So the cash is very important. The second one is this belief that the government here doesn't think that having a government can manage a company. A government cannot manage a company. Can manage the country from political side, but not from the economics of it. So there are lots of managers who could manage companies independently of the government. So from that is one view that says that really everything should be privatized, and the private sector is the most efficient way of managing those companies, because when you have them under state control, they tend to be inefficient. So they tend to have, for example, lots of employees. They tend to have lots of slack. There is no control on them. So therefore they are disasters. And what happened in Russia, for example, or in other countries that that kind of followed kind of the socialist or communist system, it's true that maybe those companies really didn't perform well. They didn't work properly. But on the other hand, when you look at the case of China, you might say, oh no, maybe it's different. Maybe there is another model. Maybe a combination of state ownership and private ownership might be better. Why? It's because when you give everything to private sector, they may tend to pursue only profit. So, for example, you have lots of unemployment. They just the company just privatized, and then the first thing that those managers in the private sector will do is to sack many people, to close, for example, many subsidiaries that are not profitable. So, for example, in terms of the post office here in England, they are thinking of stopping delivering letters to some villages. They say, oh no, it's not profitable because there are not many letters there. So I'm thinking about my poor village where I used to live. I mean, when I was born, so every morning we wait for, we call it the mail delivery, and we wait for letters. So it was a really big event, because he comes and then we talk and then we joke and we have letters. Oh yes, so especially when we receive, I remember when we received the bulletin, the transcript of our marks, and say, oh yes, we got we got a good mark. So it was really fascinating. But if it was here now in England, they are thinking of stopping delivering some letters to those villages. So you have this constraint that when you are private, you do everything to maximize profit. So you cut costs, you make people redundant, you do everything. As long as you generate a big profit, that is the best way. So but people, maybe in the in the short run it might be good, but in the long run maybe it's not good for the economy. So that is really the puzzle. So that is really we don't know so far which system is best. Is it kind of the US and the UK system that tend towards more pure capitalism, i.e. pure profit, or is it much more something that is in China where there is roughly 50-50 private companies and state-owned companies, or is it the German market where it is something like 70-30, i.e. they have more, kind of bit more capitalistic, but they have a bit more social. So they allow more companies to recruit. The workers have got more right. In the UK and the US, they don't have a right. So, for example, if I don't publish here or if I don't work hard, they just sack me. If the students, we are evaluated every term. If the students put that I don't teach well, I can be sacked easily. So therefore, I need to work very hard in order to keep my job. But if I were in France or Germany, I have a contract and I stay for life. Even maybe if I don't perform well, I still there. I have my right there.
So I guess that kind of leads me to the next thing, because I wanted to just maybe if we could step back and consider the social or even the philosophical foundations of these market economies or capitalist market economies. So on the one hand, you have these people that say, free markets, they basically just reflect human nature. They're a natural order by themselves. Everyone just have to obey these orders and play the game, and that's like humanity basically. And on the other, we see lots of evidence, lots of voices that says, well, you know what? There's a big gap in terms of wealth distribution, and free markets are not fulfilling this promise of, this justly distributing wealth and so on.
Excellent.
So, are they really free? Are markets really free? Do they really reflect human nature? I mean, should we think of an alternative, like a more just system that might lead us to just?
That is a really very, very big debate in the sense that we are in between. I mean, everyone tries to defend the system that they have. I mean, if you look at the US, you go to the US, there is no discussion of kind of socialism. I think at a certain point, even when you go to the US, you have to sign the entry form. If you travel to the US, that you are not communist, otherwise they will kick you out there. So it's there. It's just pure capitalism. So there, it's definite. I mean, if you look at the US, obviously it worked for a number of years. They have a well-developed market. It allowed really the individuals to be free. I mean, you could look at Mark Zuckerberg. He invented the Facebook in about 2001, I think, or 2000, and then in 2006, and then in 2012 or 13, he brought the company to the market. I think it was 2012. So it's in about 6 years' time, just free, and you see now he's billionaire, and in yesterday's news they had the list of billionaires. I mean, you see that the US is really the top one. Where is this money coming from? Is really from entrepreneurial. That it is a market that allows you to be free to create your company and to create wealth. So you have ideas, you explore them, you are protected. There is the IP, the intellectual property that is protected.
Right.
You as an individual entrepreneur have got all the rights. The worker has got lower rights. They don't have too much. I mean, you recruit people, you see that they don't work very hard, you sack them without too much cost. I mean, the cost is negligible. But if you go to France, you recruit somebody in order to get rid of that person, it will be very, very difficult because it's much more kind of relatively bureaucratic, and because the system protects more the workers. Yeah, so therefore, if you look at the disproportion between the growth rate in the country like the US comparing to Europe, you see that US is much, much higher, yet it is a relatively new country. But achieving that level of development is extraordinary, and that they achieved it because there is this free market. They give the individual the ability to go and create companies and to be rich, rather than keeping you always poor. Obviously, what we notice now is that there is always this gap between the rich and the poor. So and there is also less social mobility in the sense that if you are born rich, you are much more likely to die rich. If you are born poor, you are much more likely to die poor. But still, the movement in social mobility is quite kind of people there have got lots of opportunities. I mean, look, for example, at us. I mean, if we came from Algeria, yet, alhamdulillah, we achieved a relatively good level. I mean, because of our work, because UK gave us the opportunity to work hard, to do, to really to penetrate to be kind of at a higher level, or relatively at a higher level, good university, etc. But if we were in another country, maybe we will still be at lower levels. So there is no kind of middle class. There is no. So on the one hand, you can say that, given this example of the US, UK, and relatively even a bit Europe, given that the free market is adopted in those countries, you can say that the opportunities are there, and people, they take those opportunities, they get developed, they create value, they create companies, they exploit really. So the growth rate in research and development is extraordinary in the US. But then if you look at, again, China also gives us this idea that there are also opportunities when you have a less freer market, where you have really kind of controlled market. So probably it might, I'm reading one book, in fact, that says it's not really the free market that is not bad. It's the way you exploit it, it's the way you manage it, it's the way you put people who can manage better that economy. So China appears to have much better people to manage the economy. So in the US, they just did a free market. The big disadvantage with free market is that you are prone to crisis. You see, 2008 crisis is mainly the financial crisis is mainly from the US. The 2000 crisis, I mean, where the internet companies' stock price just went down quite substantially, is a very big crisis. Even if you go to 1929, there was a big crisis in the US. So when you have this free market that is not controlled, you tend to take risk. There may be lots of crises, but if you know how to manage those crises, then you push yourself up. Like nowadays, the US has achieved relatively the higher growth than the pre-2007 crisis. But in the China, you have less crisis because it is relatively controlled. So that's really the puzzle for us. Which system is the best? So far we don't know. And both systems are relatively, I mean, in particular, the Chinese system is relatively new. So we need to give it a bit more time to see whether it is sustainable or not.
It's also questionable whether the Chinese system is actually really that different. As some people may say that it's actually just following the capitalist model.
No, I think it is very, very different. I mean, if we did some studies there, and it is much more controlled. So the Chinese government has got really lots of control. For example, companies that are quoted in the Chinese stock market, many of them are state-owned. So the government still owns something like 51% of those companies. So the government ownership in those companies is quite strong. In the US, the government ownership is roughly zero. The UK is zero. There are some families, obviously, that own shares, but it's not the government. So the government is really kind of the laissez-faire. It's a free market. You are there, do whatever you want. You've got some rules, obviously, and then again, the legal rules are different. It is much more kind of common law that allows you to be much freer than the civil law that we have, for example, in France, where everything is dictated by law. In the UK and the US, it is much more common law. They have, in fact, guidance. And for companies, they tell you, okay, normally you should do this, but if you cannot do it, but you explain. What we call the comply or explain. So they give much more flexibility to companies to really do many things and to be performing.
The gap that you mentioned, the wealth gap, is that just like inevitable? We have just to accept that if you go this free market, some people are just going to end up really rich.
Yes.
Others are just going to.
That is a good point. Well, in theory, if you take in theory, the higher the growth in the market, the more the poor people get kind of richer, and the more the rich people also get richer, but the gap tends to narrow down. because that growth is shared between the poor people and the rich people. What now we discover, and there is just a recent book that is very interesting by Piketty, it's called Capital. In fact, it's like Karl Marx Capital, the book of the Capital. So it seems that the people who are benefiting more are the people who are at the top. Actually, the top 1% of the wealthiest people in the US, they have their income increasing by 10% continuously per year, while the bottom ones, in fact, is decreasing. Their wealth is decreasing. So the income gap is widening instead of going together like we would expect in theory. Unfortunately, it is widening. So therefore, it's really, that is another drawback of this US system. Is really the wealth is not shared equally between the rich and the poor. The rich are becoming even more richer. The poor are becoming even poorer.
Okay, so I'm going to take you to another tangent again. So there's this recent interview in the Financial Times. It was delivered by Professor Timur Kuran. He's a professor of economics and political science at Duke University in Durham. So he argues that, and I quote, Islamic finance is a faith-based fabrication that sits awkwardly in a modern business school.
That's good.
So now here at CAS School, you do have a specialist stream of Islamic finance, don't you? So what do you think about the place of, say, Islamic finance in a modern business school? And is there a need to develop this kind of professional teaching of Islamic finance in, say, for example, I don't know, here, Algeria, or elsewhere?
Okay. That's in fact, if you look again at the Financial Times and you click my name, you find another interview that I had with them, and I contradicted really what he said, totally different. And again, I had a recent interview just down here with, I think the publication is called The World of Finance, but they made a video, and now again it's on YouTube, and then they asked me some questions about Islamic finance. So it's true. Well, I was the director of the MSc Finance, and then I felt that there was a need for a real education in Islamic finance. So we do only the conventional. So anything that we teach the students is totally conventional. And then while the city here is very, very big in Islamic finance, so our students will go out from here, and then they get maybe recruited by some of those Islamic finance companies, and they don't know what is even Islamic finance. So it gave me the idea of really having an elective one course on Islamic finance. And we have also 3 courses, in fact, in Dubai. We have an MBA in Dubai, and there the students can specialize in Islamic finance. So the fact that at CAS, and also there are some other universities that do it, the fact that we introduced, and they allowed me really to introduce Islamic finance, means that there was a need, and it is accepted. It is something that is not what we call taboo. It's not something that, don't do it because it is just Islamic. No, they are open here. They're very clear. They said, so I got one lecture, obviously I cannot teach it. It's not my discipline, but I got somebody, and since then he has been teaching it about, I think 10 years ago now. He has been always teaching it, and very, very successfully. So we believe that Islamic finance is not only a kind of discipline that the students need to know, like any other discipline, like, I don't know, international finance or something like that. They need to know it because it is so different from conventional. So I totally disagree with that quotation that you mentioned earlier, in the sense that probably people, they don't understand it, or probably people, they just look at the practice, because sometimes when you have practice, it's totally different from what you would expect. So I give you an example. Islamic finance normally forbids debt. So it's not, you shouldn't finance your activity with debt. You shouldn't really get riba. You shouldn't, I cannot lend you money and then you give me money with interest. So interest is not halal. So, but when you think about financing methods for companies, it means that if I am a company or an individual, it means that I can follow only this principle, which means that I can only finance my activities with equity. There is no debt. And this is impossible, because you might need, for example, some money for 6 months. And if you need for 6 months, you cannot go to the stock market and then issue shares for 6 months and then buy them back after 6 months. It's too expensive. When you issue shares, it's for long term. So the only way that you can finance your short-term activity, like for example, paying your employees because you sold some products, you didn't get the money from your client, etc. So you are short of some money now for 6 months, for 8 months, or for say less than 1 year. The only way is to have a debt. So what the Islamic finance scholars have invented is what we call the sukuk. A sukuk is a form of debt, not equity. So you issue it now, for example, at a price of 100. So I say you give me 100, and I give you that certificate which says it's sukuk, and then say 2 years later, or maybe 6 months, or any time period, I buy from you that sukuk. Okay, I give you 100 pounds that you have invested, that you gave me before, but I give you also some extra money. So something like I give you 20. So in total, I will give you 120. That 100 is no question about it, because you gave me 100, I return to you 100, so it's halal. But the problem is, how can we explain the 20? Is 20 enough? Is it a lot? Is it lower? And more importantly, is this an interest or not? Is this a riba or not? So there is difference of opinion. So people might think, like this quotation that you said, it's like really kind of conventional debt, normal debt, and the 20 is pure interest. And therefore, what you are doing is really kind of just taking the debt and calling it sukuk. So instead of really calling it debt, it's sukuk. But in fact, you can take another view to say, no, the sukuk will be different. It is, yes, we can call it debt or sukuk, it doesn't matter about the name, but that 20 might be a participation in the profit that I have generated from the 100 that I borrowed from you. So you gave me 100, I didn't put those 100 under my pillow and then I was sleeping under them. I used them. I bought some products, I sold some products, I made new products, I sold, so I made profit on that 100. Then I thought that 20 will be your contribution to the profit. So it's really kind of, it's totally halal in Islam, is a participation. So I give you the money to participate in your activity. And then you give me the return from the profit that you have generated from that activity. So depending on the way you see this return, it's not the principle of 100. It's that is not question about it. It's the return that I give you, 20 or 30. Depending on the way you see it, you can see it as interest, and therefore you can say, oh, this Islamic finance is wrong, and it's just the practice of Islamic finance is just really kind of changing the color of debt. Or on the other hand, you can say, no, it is consistent with Islamic finance because I participated in your activity. So, for example, if you invested those 100 in a bad project and you went bankrupt, you won't give me the 100. I lost. So therefore, those 20 is the return to compensate me for the risk that you are taking here. There are also other concepts of Islamic finance, like for example, any investment should be in asset-based. So I cannot invest in derivatives. So I had a guy calling me yesterday to tell me, oh, do you want to invest in what they call contract for difference? So I give him some money and then he will bet on the stock market going up or going down. So it's really betting. It's like you go and bet on horses. And I said, no, this is not my principle. I don't invest in, this is totally betting, and betting is not in my radar. I don't invest in betting. Or you, for example, you cannot invest in companies that produce alcohol, or you cannot invest in companies that produce the arms, for example. It's arms hurt people, etc.
So is it bringing all this different perspectives?
Yes. So in our course, so it's really teaching those concepts to the students. So for example, the guy is really very good. I hope he will carry on teaching here. He talks about different parts of Islamic finance. So he doesn't talk only about investment, like for example, which shares are you going to buy? So if you look at the shares in the London Stock Exchange, and if you follow Islamic finance principle, you need to screen those companies. So you exclude, for example, British Aerospace, because British Aerospace is defense companies. You exclude it. You exclude some companies, for example, even maybe tobacco. companies that produce the tobacco, you exclude them, they are not ethical, etc.
Right.
So you screen companies. So this teacher teaches the students how to screen companies,
Right.
and in fact he has got his own company that screens that screens stocks for Islamic finance stocks. It's
Right.
announced ethical stocks.
Right.
Another part is, for example, insurance. So normally insurance is the takaful in Islamic finance. So he teaches how different is Islamic is takaful relative to conventional insurance.
Right.
He teaches some other issues about corporate finance, so how companies can finance with debt or equity,
Right.
and whether it is the kind of right for a company to have some debt, or what proportion of debt is allowed, etc. So all those, really, the students would have done all the conventional, and then they come and do the elective at the end of the year. So the last term. So we have 2 terms. From September to January, from September to December, and then January to April, and then from May, they have in April the exams. From May to June, they just finished now, in fact, the last session this week, they do those electives. So they would have covered all conventional, and then they come to take this course that gives them a different perspective. It's very, very successful. In Dubai, we have 3 courses. So we have Islamic economics, Islamic finance, and Islamic law.
Right.
So, but there it's more for MBAs, and they're really specialized, and that again is another successful course.
Right. Okay. I think what we're going to do now is try to see whether there is any questions coming from the audience. So let's check at the back of the room, because the next part that we want to go into is just to speak a little bit more about Algeria.
Okay.
I'm just going to see if there is anything that's maybe relevant to this, and also give you a bit of a break.
Okay.
Let's have a look. Okay. Did you send me something on? Oh, Skype. I can't see it. I have one email which is a question that actually there's some related to a question that we're gonna ask, so we'll put it together. Let's see if there's anything else. Okay. Okay, so we'll keep that together with the question I'm going to ask. I'll point to it when we get to it, inshallah. Just okay. Okay. So another email just arrived just now. That's good. Just bear with us.
Okay, don't worry. Just go ahead.
I'm just noting this down so I don't forget it later on. We're doing both Skype and personal email, actually. Yeah. Okay. Yeah. There you go. I got another email. So this is from right. Let me see. You sent it to my Gmail. Yeah.
Mais en même temps, je profite pour dire bonjour à tous ceux qui nous regardent.
Absolutely.
C'est tous ici en Algérie, donc on leur dit bonjour. Voilà, le ciel il est un peu gris, on est en Angleterre. On aimerait bien être en Algérie, mais malheureusement, c'est le travail. Mais on va essayer d'être un jour là-bas. On va essayer de partir.
So, okay, so there's another question which is not about us. So there's one question related to Algeria. I'll leave this one into this. And there is another one which is not related to Algeria. Maybe you can tap into it a little bit. So this is about the recession of 2008.
Okay.
And the question is asking, say, after the great recession of 2008, do you think that financial markets should be reformed and regulations changed in any particular way?
Okay, that's again an interesting question, in the sense that is very big debate. In the sense that I mean, comparing to what happened in the last few years, really the financial crisis gave us a hint that, as I said earlier, the free market doesn't work all the time. So the markets might not be sustainable as they are. So they are subject to crisis, and therefore there is a need for some regulation. So again, given the conception of in the US and the UK, they try to minimize the intervention. So they really like to have free market, and therefore introducing some legislation is always very difficult. It's always difficult to accept, and there are lots of debates. And you know, here before they introduce any legislation, there are always studies. So they do some studies. They try to see what really went wrong. And then from there, what went wrong, they try to devise some legislation that is going to be in balance, in the sense that law is always something that is seen as being providing some harm to companies or to individuals, because they are not free. You restrain them. You block them from being inventive.
Right.
But at the same time, the various governments, they saw that they have lost a lot in the financial crisis, so they have introduced a set of rules now. So since then, there are lots of constraints. For example, on banks, the banks now, they have to have a kind of ratio, a leverage ratio, which is relatively high, to allow them really to be able to cope with any financial crisis. For example, in the UK, a large number of companies have issued some what we call the cocoa bonds, which are really kind of the bonds that are a debt that can convert into equity if that bank is in financial crisis. So normally you issue debt, you hold the debt, and that's it. It's debt, and then you get some interest on it. But those contingent liability bonds, if the bank is in financial distress, then those bonds, they become immediately equity, and therefore, if you have equity, therefore you don't pay any interest, etc. on those. So there are lots of regulations that came in, and also lots of inventions by those banks to cater or to protect themselves against any future risk, because they suffered a lot themselves too.
So you mentioned that, and there is a question that came from, by the way, thank you for this question. I will send it. And another question from AB. So thank you for this question. This is asking about debt, and it's they're wondering about government debts.
Okay.
They think in the US is a really rich country. How come they have really large debt?
That is a very good question. It's in fact probably it's the other way around. It's because they have lots of debt. That's why they are developed. So in other words, that a government, you can take it as being like any company. Right. Like any Sonatrach or any company. So it is an institution that needs some funding to cover all the activities, because there are so many kind of expenses that the government has. So it's financing, for example, here in the UK, the big proportion of money goes into the NHS. So they finance a lot of the hospitals, and all the health service is taken care by the government, and there is a big resentment from many people that the NHS should not be privatized. Right. So it should still stay with the government. So the NHS is the one that really uses lots of money. So they need to borrow in order to finance this. Right. Put it this way: government. If you look at the government, is really like, as I said, like any company. It has got some expenditures and it has got some income. The income is coming mainly from taxes. So the corporation tax, but here in the UK is mainly income tax. So it's what you pay, I pay when we get our salary, or when we get dividends, or when we get interest, we have to pay the taxes. So the big chunk there of the income of the government is through taxes. The expenditure, as I said, for example, roads, the hospitals, prisons, schools, etc. So all those take really lots of money. So when there is an imbalance between the resources and the uses, when the uses are higher, you need to pay more, comparing to what you get from those taxes, you need to borrow. Otherwise, where is the money going to come from? So really, it's now you might tell me, oh, if they have lots of expenditures here, why don't they increase taxes? This is again something that is not popular at all. Taxes in those governments in the US, in the UK, they should come to zero. The people, they don't believe in taxes. They say, no, we shouldn't pay taxes because the government can get the money from somewhere else. We are working, we should get...
So they borrow instead.
Yes, so therefore... was going to sorry, just the 1 point. So instead of raising taxes, then the government will be very unpopular. They will lose elections. The people will be unhappy, etc. If you tax companies, then they become less profitable. They become less motivated to create company or to work hard. So because they say, oh, why should I work hard and pay the government taxes? It's not fair. So you work up to a certain level, like for you, for example, as an individual, you say, okay, if my higher tax is say 40% above anything I get above £40,000, I can work only to get for say £39,000, 900 pounds, and then I stop.
Yeah.
There is no need to add 1 extra hour, and then I get to £40,000 and then pay 40%. Let me just pay 20% on what I earn up to £39,000. So really, any increase in the tax will demotivate people, will demotivate companies. So therefore, the tax is not something to touch. It's fixed. They change it from time to time, but they try to really to play it down a lot. So therefore, they cannot move the resources that they get taxed. They have lots of expenditures that they cannot reduce, because otherwise, if you close hospitals or you close schools, it's not, again, popular. So that imbalance between the expenditures and the income that you get is covered by debt. So the government will issue debt in the market. So we call them the government bonds. Sukuks also could be issued by governments, but those bonds are issued by the government, and they trade normally in the market. So you and I, or institutions in particular, they go and buy them. They go and buy those government bonds. So you give money, and then they give you the certificate, and then every year you get the interest on those certificates. And the government debt is huge. It's a very, very big component. And you see it, as you rightly mentioned, for the US, it's very, very big amount of debt that they have. I think I forgot the number, something like in trillion, 1.3 trillion or something like that they have. But even the UK government has got a big chunk of debt. And therefore, when we talked about privatizations earlier, one way of getting income is to privatize companies. And therefore, they get, given that the tax, they cannot change it, the way that to increase their revenue is to sell the state-owned companies and to get cash, and then to pay for those hospitals, for prisons, etc.
There's only so many state companies you can sell. Right.
Oh yes, then obviously the UK is roughly now empty. There is nothing they can do. So it was a good question. So you can have a debt from a company or from the government, but there are different types. Those corporate bonds, they trade in relation to only that company. So for example, Vodafone or I don't know, any bank, I don't know, Societe Generale, for example, might issue some bonds in the market and then get cash and then use that cash to finance their investments. The government, again, in the same way, issues bonds in the market. They will be freely traded in the market. They trade really a lot. That is, for Algeria, probably that is, we might come back later on to that. Maybe there is need to stimulate the market by issuing those bonds. And therefore, that allows really the government to function. Otherwise, it will be dead. Otherwise, they would stop paying the workers in the hospitals. And
so on that note, let's get into Algeria. Thank you again for those of you who sent in questions. So let's talk about Algeria. First of all, just the financial market in Algeria. Do you have any insight about it? How do you qualify it? What's the status of the financial market?
Unfortunately, I don't know too much about it, but I mean, I've been obviously to Algeria. I go roughly every year, and I can see what really lots to be done.
Right.
A lot to be done. I was very, very upset some years back now. I went to my old university, which is l'École supérieure de commerce. And I gave a seminar there, and l'École supérieure de commerce, c'est la rampe Chassérieux. So it's just near the big building. We used to call it Mauritania. I think now it's the Ministère des Finances there. So it's a very nice school, and I really love it. It's very small, and it had very good education, I believe. I mean, if they send so many here and so a good number succeeded, it's a very good school. So I went and presented presented the seminar there, and then on the way in Boulevard Amiroche, I saw the La Bourse d'Algérie, and I looked like that. So the first floor is okay. I mean, you see a nice door with a glass door, and then I just looked like that, and I saw windows that are all kind of very dirty and they are broken. And I said, gosh, this is the financial, this is La Bourse d'Algérie. And then, I mean, just to tell you, I was walking kind of the Boulevard Amiroche, and you pass La Centrale de la Police, and you see it in very big. So I told the students, I wish La Centrale, c'est le stock exchange, and cette bourse, c'est la Centrale de la Police. It would have been really ideal. So it shows really kind of, I'm not against the police, I mean, they have to have police, but really looking at comparing those two, I think much more the economy will work much more with the La Bourse. I think La Bourse is really, we cannot call it La Bourse because they are very, very small number of companies. They don't trade. They're very, very illiquid and no information. A financial market, as we come back again to your pertinent first question, needs lots of transparency. Needs lots of data, lots of information. Companies, they disclose information. You go into the internet, any company that you know, you go into the internet, you find so much information. It's up to you to analyze. But in Algeria, unfortunately, no information is provided about the banks, about the. I worked at La Beu. I remember it was in 1987, and I was asking for the financial statements of 1983, and they didn't have them. I think, well, it was in 1987, so they were 3 years back. And I said, gosh, what can we do? How can we deal with it? We had some contracts with some Japanese, etc. In fact, the Japanese companies were asking us for the financial statements, so we don't have them. So I think there is much more to be done. I mean, I wish I could help. I mean, I'm here to help to devise those financial markets, to talk about how to structure the market, given the knowledge that I acquired here and also abroad.
So my question was actually going to be like, what should we do to improve things? Like, what would be the role of experts like yourself in relation to what would be the role of the government? What should these two sort of roles do to try and improve things?
Oh, well, that's the first thing, I mean, that we need to do is to push companies, or not to push, but to encourage companies to come to the market. A market without companies, without kind of companies, industrial and commercial as well as financial companies, doesn't exist. It's not a financial market, so we cannot say that. So therefore, we need to push, for example, something like that company of Rabrab to come to the stock market. Why aren't they quoted in the stock market? Why don't they put at least some of their subsidiary to be quoted in the stock market so that everyone can buy shares, participate? Sonatrach, why is it not quoted in the stock market? I mean, it will be ideal for a company like that to be quoted on the stock market in Algeria, and everyone can buy shares. I mean, then you get some return from those shares because you get some dividends, you get some kind of participation that you have there. So it is a very good system. You can say you will be pleased to contribute to the financing of those Algerian companies, and you will be pleased, obviously, to get a return from those companies, Algerian companies. So, but that necessitates a good trust between those companies and the individuals. So take my example. If you tell me go now and buy some shares in any company that is quoted in the stock market in Algeria, like, I don't know, Asmidal or something like that, I would say no, because I cannot get information. I wouldn't know where to invest. Is really this company good or bad? I don't know. I don't have any. But in contrast, I go here and you tell me, what do you think about, for example, I don't know, Vodafone or any company? Immediately I can tell you what I know, just because following those companies. But I can open the Financial Times and then tell you, all the information is there. I can go to their website. I can get lots of information. So the disclosure of information in any emerging market, in particular in Algeria, will be very, very important. So we need to set up a kind of system whereby companies can disclose freely information, will be transparent, everyone can have access to them. You go to the head offices of those companies, or in the street, you pick up their annual accounts and you see how much profit that they have made, how much cost that they had, how much revenue that they had, etc. So that will be really much more, it will make those investors very confident. The second part that probably the government needs to do is to set up a structure, like we said earlier, about those system of the financial system, the loop in the financial system. So make banks much more, rather than just commercial banks, and sometimes really I feel that maybe their administration is not a bank. You just go, even if you want to get money, you need to queue for long last time I went to ask for a statement of my account when I used to work in Algeria, to give me a statement of how much money I had in my account. And they told me, no, you have to pay 60 dinars there. So already to get the amount of money that I have there, I pay 60 dinars, probably that is what I had in the accounts. I could have told them, please take it. But what you have there is really kind of you need to queue for long, and then they will ask you for those, and then say wait, etc. No, here the client is the king. Is really, you need to make this financial system much more kind of fluid. So it will go much quicker. I want to put money in the bank, yes. I want to pay with credit card, yes, it's very easy to do. I want to draw some money, very easy. In addition to those transactions that I told you earlier. So for example, if I want to buy some shares in Sonatrach, if it is quoted in the market, I don't know now how to go through all the bureaucratic system to sign this paper, No, I can do it on the internet. Immediately, I can. So the government might need to set up a kind of system, a procedure that is going to be much easier to transact, to do those transactions. So the people, the companies, etc., can do all those transactions much more easily. So the first one is to really to have a transparent system whereby companies can disclosure of information is very critical in any good financial system, because if you don't have good disclosure of information, there is mistrust between the investor and the company really that needs money there. And the second one is to set up this system, this loop, whereby it will be much easier to do any transaction freely. So you do it with cards, with checks, with so in other words, I don't have to take with me something like 1 million dinars or something like that, in order to buy some shares, or in order to buy a car, or in order to buy a house. Cash normally should be minimized. Everything should go through banks. So for example, to give you an example here, I don't pay any of my expenses, like for example, telephone or electricity or water. They all go from a bank. I sign statement, all the money goes from banks. So the bank is really, I don't waste time to send each time a check or to go and pay with cash. Cash is not accepted there. They don't trust you to take cash. So minimize the circuit of money. So in other words, minimize the cash that goes around. So make everything through banks, through the financial system, because I think it seems that lots of transactions are outside the financial system, and that creates obviously lots of things which are not kind of appropriate for a good financial system.
So I want to bring in the question that we received. This is actually a question from Algeria, just because this person mentions that they're from Algeria, not sure.
Excellent.
So they're talking about, I'm translating, they're talking about قانون المالية التكميلي. So this is complementary financial law.
Okay.
And so this is what they're wondering is, basically complementary laws are supposed to take place every now and then.
Okay.
They're the exception.
Yes, exception.
Right. Sometimes you add the complementary law to it if you miss something or something. They're supposed to be the exception. And he's saying that in Algeria it seems to be the norm. There's always, there's even like plans for, okay, we're going to have a complementary law next
it doesn't become exception.
Right. So what does that tell us?
It's again, probably a third issue that I should have mentioned when I was talking about financial system is to create some certainty in the market, to reduce uncertainty. Because as an investor, I want to make my investment knowing, having all the information possible to allow me to assess what's going to happen in 2 years' time, in 3 years' time, etc. The fact that they are putting those complementary laws or complementary kind of financial, what do they call them, the laws of finance there. Yes, then it creates more uncertainty, because today I am working on a basis of some rules, of some a kind of budget that the government has set. Here in the UK, you've got only 2 budgets: so the pre-budget and the main budget, which is in March or April. So you know the finance minister goes to the parliament and then states, reads a big kind of note there about the budget to say this is how much taxes we are going to set, this is how much income we generate, this is how much expenses, therefore this is how much debt we need, this is how what we are going to do in tax, not only next year but maybe in 2 years' time. So you give all the information possible for a decision maker to make their own decisions, so there is no uncertainty. But imagine if the UK government comes in every 3 months and say, oh no, we made a mistake, we shouldn't have increased this tax, therefore the tax rate, instead of being 30%, we increase it to 45%. Gosh, the people will be mad. So therefore an ideal system is to avoid any of this uncertainty. So you need to give all the information as it comes to the market and be clear. Even you as a government, you need to be clear to say, because the government, those expenditures and the revenues of the government will affect a lot the economy. Because if you have, for example, lots of deficit, it means that you need maybe to print some money, because it means that maybe the inflation will be high, etc. The market doesn't like that. Lacks stable inflation, lacks stable interest rate, lacks stable tax rate, lacks everything to be known well above. It's only exceptional when if there is a crisis or if there is a war or something like that, that some things become uncertain. But you need to create some certainty in the market to allow the investors, to motivate the investors really to make those decisions freely and in their own conscience and in their own without any uncertainty, because uncertainty is always creates risk. And it's worse because the risk I can measure it, but uncertainty I cannot measure it. So I cannot predict really whether the government is going to come with us new laws. So the idea is to avoid totally the uncertainty. The risk is normal because any investment incurs some risk, which is normal, but I am willing to take it, but I need to get a return on that risk that I'm taking. But unfortunately, the uncertainty, I cannot evaluate it. It's something that comes only exceptionally, that I don't know about it. The risk, I can compute it, I can use some probabilities and compute it.
I'm going to ask you one more question with regards to Algeria. There's just, in Algeria, there's lots of talks or lots of discussions or lots of observations about SMEs, small medium enterprises, and the fact that there is no sort of dynamic SMEs in the economy in Algeria. So, could you just tell us, like, what is the ideal role that SMEs play in an economy? And with that in mind, like, how can we get Algerian SMEs to play that role?
Yeah, that's a really very good question in the sense that way. In fact, we spend lots of time doing the research and also teaching this issue there. Something that is strange, when you think about the US, for example, or even the UK, you might think only that there are only big companies, those giant companies like Vodafone, British Petroleum, or any of those. But in fact, really about 80% of the companies in the UK are small companies that are not quoted at all. There are only 20% that are quoted in the stock market. Within those 20%, there are only the 100 largest companies, like for example Vodafone, BP, etc., that I mentioned, that constitute about 87% of the market. So the remaining 13% are really relatively small and medium companies. And in fact, if you look at the other market that we have here, which is the alternative investment market, there are about 50% of companies that are quoted in that market. But if you look at their size, they are very, very small. They account only for 1% the total market value of the market in the UK. So therefore the UK market is dominated by those large companies, the 100 large companies, and therefore if you see somebody coming and taking over one company in the UK, like the last time AstraZeneca, for example, there was a big row. Oh, we are going to lose one of big company, therefore the UK stock market will go down. So really, what is kind of supporting an economy are the SMEs, the small and medium-sized companies that account for a lot. They employ a huge amount of people. You cannot rely only on those 100 large companies. Sure. And there are, incidentally, they are all international. I mean, AstraZeneca, they have got their head office here, but they have their operations everywhere. So you cannot call them really UK companies. So the ones that you can rely on a lot in terms of development are the small and medium-sized companies. Another characteristic is that large companies are usually mature. They are kind of they're set up. They know the market. They dominate particular markets. Therefore, they don't grow and they don't create that much growth in wealth. But the growth is mainly in the small and medium-sized companies. Those are really the companies that are working hard and generating ideas that are much more profitable. So they are much more kind of efficient in creating new products. The majority of new products are created by those small and medium-sized companies. I mean, if you look at, even give you the example of, say, of Facebook, is a very, very small, very young company, very small company. Suddenly they created a product and now they're a giant company. Twitter is the same. They're a very small company and then suddenly they created a product and they're...
So why isn't the Algerian SMEs doing that? Why aren't they playing?
Well, I think they should. What I have a problem with Algeria is that it seems that when company is created in one area, they stay only in that area. So, for example, if we have a company in Tizi Ouzou, it just stays in Tizi Ouzou. Why don't they have another subsidiary in Algiers, another subsidiary in Oran, another subsidiary in Béchar? It's like that they grow, they penetrate, because staying only in one area, you don't grow too much. You don't know really that much there. So there is a need to facilitate how those companies are growing internally, probably in Tizi Ouzou, but also into other areas to increase growth. But after all, the market in Tizi Ouzou might be saturated. That's it. You sold all your products in Tizi Ouzou.
So that could be a puzzle for someone to try to solve. Why are SMEs expanding beyond?
In order to expand, they need funding. They need money. They need trust, obviously, to set up a company in, in Béchar, for example. So therefore, they need transport. They need facility of transport, and that is where what I told you earlier about the UK government expenditures. A lot of it goes into motorways. Lots of it goes into the railways. So lots of it goes into airports. You see how they develop the Terminal 5, and they are thinking of or even having a new terminal in the sea, just down here. So all those, because they want to facilitate communication. The HS2, the train, the high-speed train to Birmingham and to the north. That is really a very big investment. It's a huge amount of money that they are going to invest there. But they are not mad to invest in that railway. It's because they know the need that in order for companies to grow, they need some facilities of transport, facilities of communication, facilities of rules, facilities of kind of tax system, facilities of the help, but in particular financing is critical, because a company might want to grow, but then it reaches one stage where there is no possibility of getting money. The bank,
go back to the issue of the stock market.
You go to the bank, they tell you, oh, you have already borrowed for us something like £1 million, and we cannot give you any more because we are too risky. So therefore, you get stuck. And maybe you die because the company will die, will go bankrupt because it cannot grow, it cannot get some more return, etc. And therefore, it will stop. So probably by the fact that in Algeria we are not creating this environment that will allow those companies to grow and to prosper is really very, very bad. In fact, we are killing them. We are killing those companies. So we need some system, we need some environment where we can devise some possibilities of those companies to grow from all those perspectives, i.e. financing, the infrastructure, the politics, the certainty, etc. So all those factors really count a lot. And that is, if you look at the UK government, even the US, or any developed market, they really stress on the SMEs. Here I teach the financing of SMEs. The government provides them with some allowances, with some facilities of payment, facilities of funding. They have a Department of Trade and Industry, the DTI, that has got a big structure there that looks only after the small and medium-sized companies, because they are the backbone of the economy. It's not the large companies that you can rely on. Obviously, in Algeria, we can rely on Sonatrach, we can rely on those large, the very large companies. But those are really kind of specific. Help them in also facilitate things for them by making the economy much more certain, by opening them those roads, for example, etc. But you help also the smaller companies, because any investment, in fact, in roads that you do will benefit the large companies as well as small companies. But the small companies will benefit more, because large companies can do other ways. I mean, can use more expensive ways of transporting their products or something like that. But small company, you really strangle it if you do not provide those facilities. So I think, given that in any economy the SMEs are the backbone, I think in Algeria we need really to do a lot. We need to do a lot in terms of education. I'm willing to go there and teach those people, or give seminars of how to structure their company, how to finance their company, etc. Or at least bring them. Unfortunately, I don't know too much about Algeria, but I'm willing to tell them what's happening in the US, in the UK, etc. What facilities that they have, and maybe we can find some people who can be angels, who can be venture capitalists, and finance those companies, really, those SMEs.
So these experts like yourselves, who are willing to be involved in improving things, what would motivate you or facilitate that involvement for you?
I think I just get called. I mean, I did lots of bit in various universities in Algeria, just contact by emails, by friends, the people I know. They say, okay, I am going to Algeria, would you like me to present a seminar? And really free, no cost involved, and obviously if it is really kind of official, obviously at least they cover my trip. But depending on the time, because really here, as I said, it's very, very tight. I mean, last night I was teaching until 9:30 at night, because so we have lots of things to do in terms of research, in terms of admin, in terms of teaching. So really, when they give you salary here, they know that you have to earn it. They don't give you salary to sleep. But time permitting, I mean, I'm willing to help if there is anything that I can do. Obviously, I'm limited to research and to education, but I think that is really, as I said earlier, the various rankings that one company does here, always you see that the availability of educated people is the top one that makes a development of financial center. So the UK comes usually first, except this year that came second after New York, because there is this human capital which is available here. So you go to the city, you see many people are kind of working in big institutions. You see many universities. You can see how many universities here. They all do business, and they teach they teach people, and they go and work in the city.
So that's a good note to speaking of education, of teaching. Let's move away a little bit from finance, and so I want to talk about excellence in teaching. And Professor Lasfer has been awarded the Dean's Prize for Teaching Excellence by Berk in '98, 2003, 2006, and 2008. So you're consistently an excellent teacher. So,
and now they told me we stop because it's too much. We'll give you every year. So let the young ones come and motivate them.
So what the question is, like, what do you think are the key ingredients for a great lecture or a great learning experience? What makes it?
Okay, in fact, even that's a question really I get asked even by my students. They say, you are too motivated. What makes you motivated? The first thing is because I like my job. I mean, since I was young, I even used to teach my brothers and sisters. They come, sometimes I get angry with them, I'm sorry. But it's just because I want them to learn a lot. But even when my children, sometimes I get too tense with them because I just want them to learn, and I am so attached. So when I do something, I try to do it as good as possible. So that I try to do my job in a proper way. So I spend really time thinking about how to present the issue in a more concise way. For example, we have got here the people I was teaching even last night. They are kind of we call executive MBAs. Many of them didn't do finance at all, so they did engineering, they did architecture, but they want to work in the city, and therefore they come and do an MBA. And an MBA is Master of Business Administration. So we teach them marketing, we teach them strategy, and obviously finance. So when I teach finance with them, I always start from scratch. I say that, assuming that no one knows finance in the class. So bit by bit, I bring them like that with some very simple examples. I take the Financial Times with me, so all the time there, and I show them the reality. So what is happening? So it is a matter of getting the attention of the candidates, attention of the students to follow really what you are saying. Because if you just, first of all, I never sit down when I teach. I remember in Algeria, usually we have a teacher there and then sitting down and then dictating. We don't do that. No, always standing up. I teach sometimes for example, in Dubai, I teach about 8 hours in a row. In fact, I thought next week I might teach about 9 hours.
For the cycling day.
Yeah, that's it. But you need to stand up, you never sit down, and you need to be active. You're right on the board, and we have got very good facilities. I mean, I can show you later on if you want. You just click on a button, and then you have the computer with the projector there, with a tablet with a camera that shows everything that is there. So you try to attract the attention of the candidates as much as possible. So it's by cracking jokes with them, so laughing at them, and then making them participate. So instead of just telling them, this is the solution, I tell them, no, what do you think about this? Should, for example, this company come to the stock market or not? What do you think about the drawbacks of coming to the stock market? Or what do you think about the advantages? So I don't tell them straight away, and then the students will try to compete between themselves. They say, oh, yes, this is an advantage, but then somebody else says, no, this is not an advantage. It is a drawback, etc. So really, the best way is when they are active, and in particular when they discuss some issues in between themselves. Obviously, I don't let them for long, just a few minutes, and I say, okay, now let me say what I think about it. So it's really creating in a classroom a very good environment. It counts a lot, and the students, they know. If you don't know, if for example you don't master your topic, they know immediately they are not good, and sometimes they leave. They leave the class, and here they pay huge amount of money. The MBAs, they pay about £40,000.
The students.
The students to do their MBA, and therefore they need a return on those £40,000. They don't come here to relax. No, they need good teachers, and therefore we spend lots of time trying to devise ways of attracting their attention and making the topic accessible, first of all, even for those people who haven't never done the topic, like finance, but also even for the people who did finance, to make it much more applied, to tell them, oh, this is really what is happening. So before I go to the class, for example, I read the Financial Times or I read The Economist and select some news there and tick them with the red, so that when I see the red, it's something that I need to mention, and then I show it to the students. Oh, what do you think about this? For example, takeover of AstraZeneca by Pfizer. Is it good or bad? But we'll talk more about the price. It's, for example, the $106 billion that Pfizer wants to put to buy AstraZeneca. Is it high or low? Why is it? What are the reasons for paying this amount, etc.? Very, very practical. Because if you sit down there and then put them only formulas, they don't get it. Especially MBAs, it's avoid formulas. With the masters, MSCs, I do some formulas because they have some math background, but the others, and even with MSCs, it's always practical. And it seems that it's really what works a lot. So and then in the end, what happens in the UK universities is that at the end of each term, when you finish teaching, they evaluate you.
Right.
So the course office will give them questionnaire, and then they put between 1 and 5. If you get 5 is excellent, and 1 is 0 is you are not good. If you don't get between 4 and 5, the university is not happy.
Right.
So you try to get very good, between very good and excellent. And that's really what we try, and therefore that explains our promotion, that explains the fact that we carry on staying here. So you cannot cheat with students in the sense that if you don't teach well, they know. So it's really divides in the system whereby you make the class as much appreciable as possible, as much accessible as possible. So the students come, in fact, they stay even after I finished at 9:15 last night, but they stayed until 9:30 asking more questions, etc. And so you attract them really. So it's not pushing them. It's not like pushing them to come to your class. You attract them. Yeah, it is. They come with their pleasure. You can see they work the whole day. From, say, probably they start at 7 o'clock in the morning until 5:30, and then 6 o'clock they come to my course until 9:30.
Right.
So it is a really long day for them, yet they are really so motivated. And there are also other students. I mean, in Dubai, for example, we teach 4 days in a row.
Right.
So every day about 7.5 hours, or that we teach them 4 days, and then we finish the course 30 hours in 4 days, and including the weekend. So we teach also the weekend. Yeah.
Well, your motivation has certainly come across quite strongly during this interview, and we've really taken a lot of your time, so I appreciate that very much.
Pleasure.
One final question. So, there are students, there are young researchers who might be in the UK or in Algeria, they might be interested to pursue an academic career in finance. Just a general advice. What would be your advice to these, the next generation of researchers or even professionals in your area?
Well, I think the advice that I can give them is to work hard, because I realize from my experience, from the people I know, from the people who's like they never kind of succeed. So working hard is something that is very, very critical. The second one is get interested in that area that you want. So in other words, you don't do it just because your dad or your somebody else pushed you to do something. No, do it because you like it. You see that you talk to the expert. So in other words, if people want to communicate with me, I'm happy to give them some advice as to what is involved, and hopefully all those pertinent questions that you ask, hopefully they're helpful for them, because I try to really to define what is really finance, etc., how exciting is finance, etc. But I want them to choose it themselves, not somebody else to push them. So they need to know, to read, to understand, to try to understand what is going on, to understand those puzzles, and to be interested, to say, really, let me think about if I have a company or if I am working in a company, instead of being just an administrator, how can I invent things? How can I be more productive? How can I make my company really grow? How can I set up a business? I mean, here many people, they come to study in order to be entrepreneurs. Entrepreneurship is one of the topics that is very, very critical, and that's what I told you earlier about how to finance those entrepreneurs. So they get really excited because they say, oh yes, my aim is to set up my own company, and therefore this course helps me because I learned really how to finance my company. So if you want to set up your own company, then try really to learn all those issues, and try to understand how you can make your company perform well, and to work hard. So just don't say just, oh, I set up my shop or something like that. That's it. No, it's really being able to work very, very hard, and to do many things. That is very, very important. The third one is really not to be afraid. Just for as an example, where I was young and I had to in Algeria, after 40 days we have to build the tombs of the dead people there. So I had my grandmother and my granddad would died, and we wanted to build their tomb. And in the village, obviously, there are no roads. So I ordered the lorry of the Yarman. Yeah, and then so when I saw it there, I thought, my goodness me, how am I going to transport it to down and the village, which is about something like 2 kilometers down, and it's very steep like that because we lived in the mountains. So it's so I had a donkey, but then I said, gosh, how am I going to do it? But alhamdulillah, immediately I didn't realize how I finished it. So since then I kept it in my head that nothing is impossible. That everything is possible, and as long as I put some effort into it, and therefore I can manage really to do it. So I had that big pile of the sand, and to transport it to down the village, but 2 kilometers down, I was just putting it with on a donkey. So putting it with the spade. So it's spade, and then putting like that. And suddenly it just finished. And since then, but I kept it in my mind, because that's why I said that this is everything in life. You don't take something as being a big burden. Everything is accessible. It all depends on you. How much work you put into that kind of work that you are going to do, how much interest that you are going to put into it. And the more interested you are, the more work you put with your own will, nobody's pushing you to do it, the better, the more likely that you succeed. So for in particular for the youngsters, I tell them that try to do your best and take advantage of your time. Don't slack. Now with the internet, everything is open. Try to read some books, try to read newspapers, anything that you find, just try to read and try to understand and try to think as an individual. Try to really to be creative, and I'm sure things will work out.
Do you have actually Algerian students coming to class?
We have few, unfortunately, really not that many. I mean, I had in the past few, but it's very, very exceptional. I mean, having said that, even from Morocco, Tunisia, it's the same. Maybe they go to France or something like that. But it's really a shame, because I feel very, very bad sometimes when I teach all nationalities, and then when I look around, there is no Algerian, and there is no. So I hope they will give them the opportunity to come here and to study, because it's. Investment in education is I think it was Rockefeller who said it. Investment in education is the investment that gets you the best interest. It's not good to have, say, some money, and then if you don't have money, obviously you can understand. But if you have some money to invest, it's better to invest it in your education. To give you an example, I interviewed one guy for the MBA from Peru. So we do the interviews with Skype or with the telephone. And when I told him, how are you going to finance your MBA? He said, I've been working for about 6 years. Every month I get my salary. I say this part here, something like 20% of my salary, I put it aside for my education. So he managed to save through those 4 years that he was working, to save that part for his education, and now he's willing to spend that money that he earns really very, very hard in paying those, say, £40,000 to, and coming from those South American countries, which are really very poor, it's a very, very big commitment. But immediately I accepted this guy, because I thought that this guy is very serious, he's going to work hard, he's going to succeed, and he will be a very good ambassador for our university here. So it is really a pleasure to see some people who have got this thought that instead of going to spend money in somewhere else, really waste money, he was saving it. And we have also many people who come to finance their studies here. When they lose their job, they get redundancy money. So instead of going to buy a new car or to waste that money in holidays, or say, no, we are going to put it for education. So they come here, and then when we ask them the same question, they say, well, it's really that this is my redundancy money that I want to use for my education. And it's really appreciable. So I think even the Algerians probably, hopefully, obviously I can understand that it's very expensive, but at least to educate themselves. I think even from Algeria, there are a number of courses now that are what we call the MOOCs. So they are open courses. They can document themselves. You go into YouTube, you find so many videos of professors, or just be interested in particular issue, right? Something finance, and you find so many issues there, right? Marketing, you find so many kind of free courses there. I think that
it's about being proactive and trying to
yes, I mean, take advantage. Don't be just relax and say, okay, that's it. The government doesn't, or Algeria doesn't offer me opportunities, and therefore I just relax, or I go and cry or something like that, or do something else which is, unfortunately might not be good. But try to. I think those opportunities opportunities are provided to you, try to use them extensively. Yeah.
Fantastic. Well, thank you very much, Professor Lasfer, for having us, for spending all this time speaking to us. It was indeed very informative.
My pleasure. I'm sorry I've taken so much time.
We've taken so much of your time.
But it is really a pleasure.
It was indeed a great pleasure talking to you. So thank you very much for having us. Thank you very much to people who watched us. Thank you very much to those of you who've sent some questions in. Now the interview will be available on our YouTube channel and on Inspire Magazine's and anasr.org website, so make sure you check it out in due time. And hopefully we'll see you another time for another interview. Shukran.
Thank you very much.